Hello, Namaskar viewers. I am Sanjeev Pandya welcoming you to another edition of the Tax Talk with AJ right here on ITV Gold. As you know by now, this is the show gets you all the latest that you need to know when it comes to taxes, personal taxes or corporate taxes. I know I'm still talking about taxes and you must be saying, gee, it's enough. We already filed the taxes or we filed an extension. But listen, there's always good to know something because, no information is unnecessary. Anything that you need to know about taxes, you get it right here. And the show is brought to you by Sai CPA Services, a complete accounting firm located in state of New Jersey, multiple locations in the state of New Jersey, and they can help you with taxes A to Z, complete. If you have not filed several years of tax returns, or if you have any trouble with the tax returns, or if you are still confused, please make one phone call at 908-380-6876 or visit their website, Sai CPA Services. Make an appointment immediately. Go see them, and their knowledgeable, experience, on-hand CPAs staff will definitely help you out. They do work right in front of you. It's not like they will call you and say, come tomorrow, come day after tomorrow. Right in front of you, they'll take care of everything and help you out. They have amazing clients who are very satisfied for many years. So with that note, I'd like to welcome Mr. A.J. Kumar of Sai CPA Services. Sir.
Thank you, Sanjeevji. I appreciate the kind introduction.
Yes, less than 10 days to go for the tax season to be over.
You're 100% right. We are in the last leg of the tax season. And even if you have filed the taxes, there is always something that you can learn and implement for 2023. A lot of clients, Sanjeevji, come to us, what can I do to save taxes? And I politely tell them, it's too late for the last year. So knowing what you need to know now can help you do the right planning for 2023. If you have not filed your 2022 taxes yet, please get them filed. You have few days left. If you cannot file the taxes, at least get the extension filed, please.
All right, that's what I was going to ask you. I just want to add connect with something. Football season, when it starts, it's very interesting. And when it reaches to the Super Bowl, till it's that very interesting. Once the Super Bowl is over, the question comes to football lovers' minds, what's next now? When is the NFL going to start again? So my question to you in reference to that, tax season is almost over. What's next? What can this individual or even corporate taxpayer, when I say corporate, I mean small business taxpayer, what can they do to save their money on the side and reduce tax liability for the 2023?
Absolutely. We'll be happy to address as what can you as an individual or as a small business owner do to save money on your taxes. But let's talk about the first part first, as what can you do now? Let's say you cannot file the taxes and you forgot to file the extension for your business and for your personal. There can be severe penalties for it. If you have a small business, LLC, S Corp, multi-member LLC, the penalties could be $220 per owner per month, and that can be $5,000 plus penalty per company. So if you have not filed the extension yet, please consider filing the extension. When we talk about the individual taxes, Sanjeevji, the penalty depends on the liability that you have. If you are expecting a refund from the IRS and you don't file the extension, they will not charge you a penalty.
Yes.
So please, especially if you are expecting a liability, you must file the extension. And if you are expecting a refund, all the more reasons for you to be filing the taxes now. Why would you not want your refund if you are expecting a refund from the government? Please understand the upcoming tax deadline of April 18th this year, which used to be April 15th, April 18th this year, is not just for your personal taxes, is for estimated tax filing. If you have a small business, you are supposed to be doing the estimated tax payments. So for the first quarter, estimated tax filing deadline, tax payment deadline is April 18th. For C Corporation, 1120 filer, the deadline is April 18th. So April 18th deadline is just more than your individual tax filing deadline. Please consider estimated tax payment. C Corp, they're all April 18th. If you cannot file taxes, again, please try to file the extension. And one more thing, if you file the extension, it's only for filing the taxes, not for making the payment. If you owe money, you're supposed to be paying that money, the estimate, while filing the extension. and always try to pay slightly more than necessary. So at the time when you file the taxes, you can get a refund and nobody can charge you any interest and penalty.
Well, that's a good point, because filing an extension does not necessarily mean that you won't have to pay interest or penalty.
You're right. See, interest is a factor of the liability.
Correct.
So there are two types of penalty: for late filing penalty and late payment penalty. If you owe taxes, the IRS or the state can still charge you penalty for late payment and interest on that amount that you did not pay. But you don't have to pay the late filing penalty. Correct. If you file the taxes and or the extension before time.
The way I look at it is that IRS gives you 4 months to file your tax returns.
Absolutely.
Once the year ends, right? You can't be asking for extra 6 months, without any interest or penalty. You can be making it 10 months to pay your taxes.
Well, this is how they run the country.
Correct.
If everybody decides to pay later, then they wouldn't have enough money to run the country.
Exactly. All right. So now let's talk about various retirement plans. I really want you to share this information with our viewers, so viewers will have an idea what are the retirement plans and how can one look into it.
Absolutely. I'm glad you asked. So the question that we are asked for a small business owner or for an individual, I did what I did. This is the income I have. What can I do to save taxes? I'm not getting any younger. What can I do for my retirement planning? So in this episode, we'll try to cover main retirement plans that as an individual, as a small business owner, you can consider. Not everything will apply to you. Each plan have different conditions, different criterias. So you have to really listen to the whole criteria and discuss it with your accountant, with your financial professional, to see what actually applies to you. So we'll start with an IRA plan.
Okay.
IRA or individual retirement account is applicable for individuals. It could be the business owner or somebody who doesn't have a business. IRA, individual retirement account, everybody in this country has the right to contribute to an IRA account. IRA account typically is of two types: a traditional IRA and a Roth IRA.
Correct.
And at a high level, the difference is the traditional IRA, when you put the money into this plan, you get the tax benefit immediately, meaning your taxable income goes down by the amount you put in. And for 2022, the limit was $6,500. So every year the limit changes slightly, but here the concept for the traditional IRA, if you qualify, and you have to sort of work with accountant to see if you really qualify and how much you can contribute, depending on if you have 401k from the job, you may not qualify for it. But if you do not have 401k from the job, more than likely you will at least qualify for traditional IRA. Roth IRA has some income limits. Let's say if you have a single filer, for 2022, 144,000 was the limit and 214,000 for a married filing joint. So the idea is above certain income, you may not qualify for Roth IRA contribution. And again, Roth IRA is you contribute the money after tax money. You do not get the tax benefit immediately. But when you take this money out after retirement, you get it tax free. The growth on this money, let's say if you invest $10,000, husband, wife together, and this 10,000 becomes 100,000 by the time you retire, the whole 100,000, 10,000 that you put in, as well as the 90,000 of growth in this example, everything is tax free for you.
Correct.
That's the Roth IRA concept. So Roth IRA has income limits as who can contribute, and your income has to be below certain limit. Traditional IRA does not have any of those limits. As long as you do not have any other retirement plan, more than likely you can contribute to traditional IRA, where you get the tax benefit immediately, meaning your taxable income is reduced by the same amount.
Traditional IRA or Roth IRA, they have been very easy to understand.
Absolutely.
And very popular IRAs for IRA plans rather, for what, last 2-3 decades or maybe more?
Absolutely, since we have been practicing, absolutely.
Yeah, and that works out very well, viewers. If you don't have any one of the plans, if you don't have your money put in any one of those plans, or your spouse, you should really look into it, because these are very basic, very easy to understand and to follow retirement plans. All right, so now let's talk about profit sharing plans.
Absolutely. So there are other type of plans. So IRA is just one type of plan. Profit sharing plan, as Sanjeev ji pointed out, is a plan where you can share the profit, and this is for typically a business. You get the profit from the business. Profit sharing plan only applies to you when you have a business. You don't have to have the employees. You could be your own employee, or you could be one-man army in your business and you have a Schedule C or single member LLC. Even then, profit sharing plan applies to you. And typically they are of two types. As we were talking about IRA, traditional IRA and Roth IRA, similarly profit sharing plans are of two types. You can have defined benefit plan or defined contribution plan. If you think closely, benefit is defined in a defined benefit plan, meaning,
I tell you what, defined benefit and defined contribution plan, right?
Absolutely.
That's under profit sharing category. Let's take a break right now, because I think we're about to give very valuable information to our viewers. We'll be right back after these messages, and when we come back, AJ Kumar will continue with the information on profit sharing plan. So please stay with us. Welcome back to the second half of the Tax Talk with AJ right here on ITV Gold, and this weekly show on taxes gets you all the latest information that you really need to know. We are in middle of this conversation. Before the break, AJ started to mention about profit sharing plan, and especially one-man army, as he mentioned, that if you are a business owner and just a one person, that you are the owner, you are the employee and everything, you can still follow the plans, but there are two ways of doing it, and AJ just started to explain that before the break, so continue.
Absolutely, Sanjeevji. So defined benefit plan or defined contribution plan that we were talking about. In first plan, where we say defined benefit, the final amount that you are going to get is predefined, meaning the plan says when you retire, you will get $1 million. In defined contribution plan, the contribution is defined, predefined, not the benefit. So you say, on your behalf, the employer will contribute $10,000 a year. Now, whatever you get is up to the market, up to you, where the money is being invested. That's a defined contribution plan. So the contribution, the 10,000 in this example per year, is defined by the employer. In a defined benefit plan, the employer is on the hook to contribute more if the market is not doing well. If the market is doing well, the employer can contribute less, because the benefit, the final amount is predefined, Sanjeev ji. So you don't have to have employees. You can be the only employee. You don't have to be on the payroll. You can have a single member LLC, multi-member LLC, S corporation. All these type of companies will qualify for this type of defined benefit or defined contribution plan. Just remember, whatever you do for yourself, you must do it for everybody. What it means is, let's say if you have 3 employees and you decide, you know what, I want to contribute $10,000 per year for myself. Depending on what your age is, depending on what your salary is, you may have to have a similar contribution for the employees as well. Especially in a defined benefit plan, you may have to contribute a lot more than what you're contributing for yourself for the older employees, because they have lesser time before the retirement. So just be careful. Don't try to implement this type of plan yourself. IRA, you can do it yourself. Call the bank, call any of the financial institution that I want to invest this much money into my IRA plan. But when it comes to the employer-based plan, business-based plan, especially defined benefit, defined contribution plan, make sure you have somebody guiding you through the process. You don't want to find yourself in a situation that you must have contributed so much money for this employee and now you are being penalized for that thing.
All right, that's some of the key points that you mentioned for the profit sharing plans. Now, what would you suggest this profit sharing plans with defined benefit plan and defined contribution plan, right? What would you suggest that this plan is good for the business owner with how many number of employees?
Well, ideally this plan is great when you have no employee. When you are the only employee or when you have absolutely no employee, this is the right plan for you.
Okay.
Or if the only employee you have is your wife or your children, that's the plan. You don't mind contributing for everybody because everybody is related to you. Everybody is all about you. That's the ideal situation. Or in other situations when you are the oldest employee in your business and everybody else is young. For example, a doctor's office, a surgeon's office. By the time you become a surgeon, you become successful, you are 60 years old, everybody else in the office is 20s. That's a great plan. Then you probably will want to go for defined benefit plan. But again, the word of caution here is, do not decide these things yourself. It's a very complicated plan when it comes to the defined benefit, defined contribution plan. Make sure you have somebody hand holding you throughout the process.
All right, and that person could be one of individuals at Sai CPA Services, because they will guide you, they will advise you what is the right plan for you, and then will advise you how much money that you can invest in it. It depends upon the profit of the company and whatnot. But it's a good thing that, it's good for one employee, one owner, or maybe 2 or 3 employees, but within the family. And we Indians are in majority of those businesses where it's individually owned, and a wife or spouse works there,
very, very common.
and maybe son or daughter works there, so
Absolutely.
it's a family owned. That's a great plan.
For family-owned business.
Family-owned businesses. Quickly, I want you to shed some light on simplified employee pension known as SEP plan.
SEP plan is a great plan. You'd need much lesser hand holding. The administrative cost is much lesser, absolutely none. For the SEP plan, it's a great plan, especially for the single owners or the family owned businesses. Again, the reason we bring in the single owner or family owned business, because what you do for yourself, you have to do it for all the employees as well. The difference is maximum limit is much lower in an SEP plan. Last year it was 61,000. It changes every year slightly. So 61,000 is the limit for SEP plan contribution. The best thing about the SEP plan, that you can get the contribution that you make towards your SEP plan, you can get the deduction as a business expense when you're contributing to your own retirement account if you own the business or if you are the only employees. So SEP plan is great, our preferred choice when you have no employee or a family-owned business.
All right, thank you for that. Now, most standard and easy to understand 401k plan.
Absolutely. So 401k plan is typically used when you have a lot of employees, 15, 20 employees. Then 401k plan, you say, can I do SEP? Well, you have to do for everybody. Okay, I can do SEP. How about the defined benefit? You have to do for everybody. Okay. So are you saying 401k does not have to be done for everybody? No. That's not what we are saying. 401k has to be done for everybody, but employer, your business, can put a limit in order to have it a qualified plan, as long as you are contributing 4% and just 4% of someone's salary. They can contribute as much as they want. The employees can contribute, say for example, in 2020, the limit was 20,500. In 2023, the limit is 22,500 for employees under 50 years. For employees over 50 years, the limit is 30,000. So employees can contribute whatever they want to contribute up until that limit. As an employer, as a business, as long as you're contributing up to 4%, you have a qualified plan. The key here is, whatever percentage you contribute for all the employees, you have to keep it consistent, you have to keep it same for everybody, and that's the percentage for you as well. Meaning you cannot really say, I own the business, it's 10% for me, but 5% for you. That's not okay. It has to be same percentage for everybody in the 401k.
Same percentage for everybody, and a year after year after year, it has to be the same.
You have the option to continue or not to continue. You have the option to increase it. As long as it's over 4%, in order for the plan to remain a qualified plan, the minimum employer contribution currently is 4%.
Okay, all right. What can you share with us about trust plan?
Well, trust is really an extreme situation. So the idea behind the trust planning is, at a high level, we typically do it in 2 reasons. When you have a situation when your assets are expected to grow roughly over 22 million throughout your life, then you want to push some assets, especially the assets that you expect to grow in value, into an irrevocable trust, and then the beneficiary get those assets at that value at the time of transfer. Or if you're expecting a lawsuit, meaning if you are in a business where the lawsuits are frequent, then having an irrevocable trust can be a great idea for you, but that's an extreme financial planning. Please do not do this type of trust planning by reading it yourself. You must it's a great idea. It's very important for you to use a financial planner, a wealth planner, somebody who knows what they are doing to walk you through the process.
All right, and all these plans, they have certain conditions when it comes to withdrawing some
Absolutely.
or the full amount from the plan. Taxes consequences can also be different in all of these plans. They allow you to take money out, but there is a penalty, there is a tax involved and whatnot, and that's why you need to take an expert's advice, and Sai CPA Services can be that expert. So do reach out to them by calling 908-380-6876. And while we are talking about small businesses, as AJ mentioned, some of the plans for small businesses, I just want to point out one thing. The Sai CPA Services can also advise you and guide you if you want to start your own business and what is the right entity for you, LLC, C Corporation, S Corporation, depending upon your tax situation, what kind of taxes that what kind of tax form that you've been filing, and what are your income and whatnot, and what kind of business that you want to start. And that is a very, very important decision, because you don't want to set up wrong entity and end up paying a lot more taxes than you should be. So that's why before you start any business, reach out to Sai CPA Services for guidance. And if you already have a business and looking for someone to do your bookkeeping work and accounting work, Sai CPA Services can also help you in that matter as well. So that's a 908-380-6876. As we have covered all these key retirement plans, right? And anything else that you like to add about these plans?
Absolutely. So these are just the examples of some plans. There are a lot of other plans. You can have the premium funded plans, you can have the captive insurance plan, depending on your situation, depending on how far you want to go and how much money you want to invest and what your situation is. There are a plethora of options. You have to decide where you stand, where you want to go, and then find the right expert who is willing to work with you to get where you need to get. Captive insurance, for example, is used very frequently if you have more than $2 million in liquid asset, free money, that you can invest for at least 3 years, if not 5 years, every year. If you're in a situation where you have at least $2 million available to you for next 3 to 5 years, every year, then captive insurance could be one of the options. Premium funded plans, where the premiums are supposed to be very large and are funded by the bank, not by the business, could be another option. Partners insurance, where you have the key man insurance, could be another option. So there are a lot of options. We covered few options that we thought will be typically applicable for a small business, Sanjeevji, but these are not the only options. So you work with an accountant, work with a wealth planner, and find out what makes sense for you. Not only it will help you save money, it actually helps you retain the employees as well.
Very good. And when you talk about a lot of options, viewers, I just want to let you know that the only option you have when it comes to filing taxes right and doing it right is a Sai CPA Services. If you already have filed your taxes right now, you're not happy with the tax liability, it's okay. Just keep Sai CPA Services name and their phone number handy, and before the end of 2023, reach out to them, set up a meeting, call them up for an appointment, and reach out to them, meet them, and figure out how you can have your taxes done right for the year 2023. Sai CPA Services, 908-380-6876. AJ, once again, thank you so much for your time and sharing valuable information. I am Sanjeev Pandya. Until we meet again, same place, same time, wish you very happy tax-free days ahead. So long.
Thank you.